Hello guys and welcome to London45. Before I get started, I just want to say thank you today. Trader Day, without quarterly theory this would not exist. Without him, TraderNurse certainly would not exist. And so it's a big, these are all based off his concepts and also lethality. And without his New York model and his wonderful stuff on X, in particular his 923 to 1008 model, this also would not exist. So thank you. And let's dive right into what London45 is, how we can exploit this time-based model and ultimately help us become profitable. But also nothing's guaranteed, it's not financial advice, it's also just for educational purposes only. Okay, let's dive in. So what is it? London45 is a time-based model combining quarterly theory and ICT concepts. This time window is between 2:38 to 3:23, which is 45 minutes, during the London session, or Q2, which is midnight to 0600, and we seek to take a trade within this time window. So why 2:38 and 3:23? So during this time window we see an injection of volatility. It combines two microcycles, which are 22.5 plus 22.5, which equals 45 minutes. So a microcycle is essentially there are 4 microcycles inside a 90-minute cycle, which you'll see just here. And we are combining two 90-minute cycles together. So we're combining the manipulation cycle, which is Q2, and Q3, which is distribution cycle during the London session. All right, and the London Stock Exchange opens at 3 o'clock New York time. So this acts similarly to our 9:30 open, with some form of injection and volatility, and that is why we've chosen it. All right. It also, this particular macro, if you want to call it that, ICT's macro between 250 and 310 also occurs during this time. So that's just something to be aware of. So going deeper into 2:38 and 3:23. Right. So 2:38 plus 3 o'clock to 3 o'clock is 22.5 minutes or 23 minutes, which is the 4th cycle of Q2. So you can see here this second column is our 90-minute cycles, this bottom column is our daily cycle, and this top two here, this is the macro we're in. This is the last cycle of Q2, which is Q4. This is the last cycle, first cycle of Q3, which is Q1. I don't want to confuse you too much, but if you were to use a day's indicator, this is what you would see. Okay, so this is the 90-minute cycle here between 3 and 4:30. Generally, Q3 is where you want to be trading, but we can obviously take a trade in this time. Okay, so these are the assets you want to be trading and the ones that it works the most in. So our indice triad between ES and QYM, our gold triad GCXAU, EU, XAU, and JVP. You want to be using the forex.com for these two here, XAU, JVP, and using the futures contract for GC, which I'll show you shortly. And our oil triad, it works really well for that with CL, gasoline, and Harbour. Okay, so these are our rules. Our rules for London45 are pretty simple, and I've outlined this top one because without this top one, these bottom 3 are just completely irrelevant. Because if you do not have a key level of liquidity, which must be ran, so anything in the form of previous day high, previous day low, previous session high or low, high time frame gaps, a 4-hour imbalance, a new week opening gap or a new day opening gap, without any of these and your key levels, it's completely irrelevant because you need a key level to be ran before this time or during this time, and then we can look for this. This is our entry model. Okay, so a key level, you must be within 238 to 323. That's your block, and your sequential SMT or SMT to form, preferably a 2-stage sequential SMT, which I'll go through. And you want to be above or below both true opens. Obviously above if you're looking for shorts, and below if you're looking for longs. So these are our true open times here, which you'll also see in some examples that I'll give you. So this is a basic outline. Right, so we've got our equal lows, which will be our target, or 3R. Okay, our key levels at the top here, you can see during this diagram, we're above both true opens, our true London open at 1:30, our true day open at midnight, and we're just simply waiting for price to get into this key level, which will in the form of a previous day high, previous day low, previous session, or a high time frame gap. Our sequential S&T forms with inside this time. It doesn't necessarily, our high time frame sequential thing doesn't necessarily need to form within this time, just a low time frame one, particularly a 90-minute cycle or a microcycle to form within this time. And then we take an inverse for value gap on the 1 minute or anything like that, which I'll show you shortly, and we trade lower and aim for our equal lows. So that's a really basic diagram. Okay, I posted this on X, and I'll post a link to my X account to show you. And yeah, that's the really basic one. So our entry. Our entry must be within the London45 time window. Enter using a 1 to 2 minute inverse. For value gap or a change in the state delivery, use NQ or ES, or the asset which is below both true opens, and use gold for the triad. Okay. So this is our first example, and you can see we actually return back into the range up here. And this part to the right is the part we're focusing on, because this is the part we actually traded. And I took this trade live. I took this trade and showed it on X, and I took this trade in front of people. Anyone who's there can attest to that. But anyway, this is our key level. This is our Asia high. I've marked out a sequential SMT, which is a daily cycle sequential SMT. You can see that in this particular time, this is around 2:15 here, or 2:30, and the reversal doesn't come until 2:45 and 3 o'clock. Okay, so the key level can be reached before this time. You just look for your sequential SMT to form during this time also. Okay, so here nothing happens unless we take out a key level, and I can't stress this enough, and that'll be stressed even further when I go through some examples. Okay, I cannot stress this enough. So we've got our key level, which is the Asia form of Asia high or Q1's high. We've got our sequential SMT in the form of a daily cycle sequential SMT between Q1 and London. Okay, this is our 5-minute chart with the same one. All right, so we are above both true day open down here and the true London open down here. For taking out our key level, we've got a daily cycle sequential SMT. So up here is where we're going to focus on, because we took this trade down. It's about a 4-hour trade. Obviously we come back, and this was against the high time frame, but because we were so far above the true opens, this became high probability. So this is our entry. All right, so we've made this daily cycle sequential SMT. I've outlined our 2:38 to 3 o'clock, our 3 o'clock to 3:23. So you want to be entering inside this time. All right, and you can see here at this 1 minute up here after this daily cycle, and there is a little SMT if you look at your 1 minute chart on the Indices triad. Obviously we come back, but that we don't care that we've come back. We just want this little piece of the pie. So our entry is on the inverse for value gap, which you can see to the left here. And I actually nearly got stopped out of this, but my stop was at the high after we closed below the inverse for value gap. Okay, and if you are wanting to be short, in particular at 3 o'clock or after 3 o'clock, you want 3 o'clock opening price, which is here, just to propel higher first, because you think about open, high, low, close. Okay, you think about your power of 3 also. So I don't want to confuse you too much, but this is a really good example. Okay, I actually entered as soon as this gap closed here. I entered, but this was probably your low risk entry here, and we got a second closure. Okay, this is your low risk entry here, and this is a good 3 to 4R. Okay, and you target equal lows. We didn't get anywhere near the true London or true day open. We were just too bullish on this day, which is totally fine, but that's a really, really good example. Okay, you want to be taking your trade inside 238 to 323. Honestly, outside of this window for this model, it's just a no-go. So our target and our exit will be equal lows or 2 to 3R. All right, so now we're going to go through some examples. We'll go through gold, and we'll go through the Indices triad. Watch this a couple of times if you need to. Please don't engage with price unless you watched these videos a couple of times, or forward tested this or back tested this. I'm a big advocate for this model, but you need to work hard and you need to be back testing and forward testing it just as much as me. Alright, let's dive into some examples. Okay guys, we're just going to go through some examples now. This is an hourly chart, this is Indices Triad. This is on, this particular trade was on Wednesday the 8th. Okay, and it's important to know that this does not happen every day, particularly in London. This does not happen every day. It happens probably 2 to 3 times a week on the gold, or on indices. You know, if you pick the right asset class, you're on the money, and you know that's something to be mindful of. So you can see here our narrative is super important. There wasn't a trade on Monday or the Tuesday. I believe you might have got one on the Tuesday. If you're just looking at it now, potentially got stopped out. However, you know, if we look at it here, this is a weekly cycle bullish sequential S&T below the true week open. Okay, so the next day is where we're looking for our trade and where we're just looking for our key levels and our narrative. Okay, so our narrative is bullish. So we're looking for a bullish trade. Why? Because we've got this true week open is up here. We've got the weekly sequential S&T between Q1 and Q2. Okay, and we're looking for a lower time frame cracking correlation to form within our time. All right, so if we jump down to the 15-minute chart here, just go back to the 8th, and you'll see some lipstick on the page. You can see this is where we this is where we got that. Okay, that's the 17th. My apologies. So you can see here. All right, we've got our daily cycle sequential S&T. Bear with me. All right, so what's our key level heading into London? Okay, you can see here we're well below the true day open and obviously the true London open, which is here. Okay, and you'll see very shortly what I've got here. So here you would only need just one stage of cracking correlation because you've already got this weekly cycle on your side. So simply you're just looking for a sweep of Asia to occur within our time. Okay, and this does occur. This is really nice. All right, and you've also got a precision swing point here, which makes the low of the quarter. Okay, but if you were to go on your 1 minute chart now, you can see we've derived ourselves from here. You get our 1 minute change in state delivery, and we just replay our times. Okay, so 2:38. What time does this happen? 2:38 to 3:23. Okay, so we've taken out this liquidity here, right? And there is on the 2 minute chart there is an inverse fair value gap, but this to me is a change in the state delivery. Okay, so you want to enter, you can enter now. So let's enter now. pop your stop loss at the low. Really good RR. You've got the daily cycle sequential S&T, and let's just go through what's happened. So I don't want to confuse you. So we've taken out the key level. That's number one. Okay, and what is that? We've got our Asia lows have been ran. Okay, and we have our, essentially we do have a 2-stage CIC, or even a 3-stage, because we've got a weekly cycle S&T with a daily cycle sequential S&T the next day. Okay, and a 15-min PSP. All right, and that's occurred at this time. Now, what time are we in? 2:38 to 3:23. Okay, are we above? Are we above or below the true day opens? Okay, look at this here. We're well above the true micro session open, true London open, true day open, and the true week open. Okay, so we're in an extreme discount. So this, to me, is super high probability, right? And you're simply just targeting 3R. Okay, this is a really nice trade. I believe I took this one. Okay, I don't believe we come back here. Right, and you just target 3R. Okay, or you can target these equal highs here. Okay, so equal highs are up here. You know, this is a really nice trade. Really nice. Right, and you know, you don't get a lot of bang for your buck in this particular trade, but there's some trades where you do cop a really nice pay packet. All right, so there you go. All right, so if we just review that quickly, as I said, we've taken out a key level. That's of utmost importance. That's always going to be number one. Okay, taking out your key level. All right, we took out the age of lows, we had a two-stage Kraken correlation form, okay, and we had our 15-minute PSV, which just so happened to grab after the fact. Okay, so that's number one. All right, so if we just go to Wednesday the 1st, I believe this is also a really nice trade. Okay, ends up being the lower day again, right? And you do get a really nice quick 90 minutes sequential SMT. All right, so if we go back to our 1 hour chart and we go to the first, just to get you a bit of guidance here. All right, you can see there's nothing sequential really here at the moment, but you know, where do we like sequential SMT to form? Okay, and we still got this high time frame narrative where we're just bullish. Okay, you know, it's really important here. Okay, so we are well below the 2-week open again. And what's our key level? The key level is this here. Yesterday's low. Okay. On ES and QYM. Now, see, we already take yesterday's low. All right, so this is where we're looking for our Kraken correlation to form. Where does it form? Inside this gap, this 1 hour gap. Okay, and you can see we do have a 90-minute sequential SMT. Okay, so again, we've got our key level, which is Tuesday, Q2, the low of Tuesday, the previous day's low, and a high time frame fair value gap. Okay, so we've got two key levels that we've already taken out. So this is where we can expect to look for our model now. Okay, so what happens? If we go to the 5-minute chart and go to the 8th, the first again, I should say. Okay, you know, this is where you'll see this 90-minute sequential SMT form, and this is where you'll see our 323, a 238 to 323 model collect. Okay, so look at this small sequential SMT, and it's happened inside this gap here. All right, I'll just outline it for you here. So this low represents Q2's low. Okay, this represents Q2's low, and this low here represents Q2's low. Okay, so here we actually do get a two-stage. Okay, it's a simultaneous sequential SMT because microcycle occurs and 90-minute cycle occurs inside a gap. Okay, so that is super important. We've taken out a key level. We're looking for these gaps, and we're looking for sequential SMT to form inside these gaps within this time. So now we can come down to our 1-minute chart. Okay, come down to our 1 minute, you know, and just start focusing on looking for a setup here. All right, and this takes a while to get to your profit target, but eventually, you know, it's super nice. Now, if we just replay that here, start anew, 238. So at this point in time, and we've marked out our key levels, we've marked out this hourly fair value gap, we've taken out Tuesday's low, okay, and we're essentially just looking for sequential SMT to form. You can see, look at this, you know, look at this here. We got our true London open, a true day open, and our true week open again, and our true micro session open. Right, so as soon as we take out this low here on YM, right, and these two fail, and when I mean simultaneous sequential SMT, you get 90-minute and micro. Okay, so if we just play that through. Okay, so we're about to take out the low here. Okay, we've taken out this low, right? What do we want? We want to inverse above this, okay, and just pop our stop at the low. All right. To me, that's the best, and I would pop it below this low here because you don't really want it coming closer than that. So that's your entry there. Stop loss below here. I mean, if it goes to this low, it's certainly going to go to this low, so that makes sense. And you can just target 3R. Okay. And I believe this ends up being your low of day. We can target these equal highs up here, or 3R, or 2R, or whatever your appetite is. Okay, but you just need to let these trades run, let these trades do their work. Okay, so if I just play that through on 5 times, you can see now got a bit of extra confluence here. You know, we're just struggling to get down, back down here, so we'll just give you a lot of confidence, especially me personally. It does take a while to eventuate, but you know, if you're happy to just sit through all this, or just leave your chart and let it play out, let it do its thing, then that's okay. All right, and it does get back up here, I think. But we'll just, there it is, up there. Okay. Alright, so let's move on to the next example. And that example is gold, because this strategy doesn't only not work on gold, it works on indices, it works on gold also. Now, obviously, I've got some lipstick here, but you know, if we just go on our 4-hour chart here, obviously gold's been in this huge run up, as we all know, and this particular day, you know, we're just looking for sequential S&T to form inside gaps, previous session highs, lows, and all that sort of stuff. So if we go on the first one here, which is the 14th, I'll go through. This is a really nice trade. So Monday there was no trade, we just had this big move up, and there was just nothing here for us to trade off. So our key levels are really important, right? And what's our key level here? Our key level is going to be this 4-hour gap here. Okay, you can see it now, right? And we're looking for sequential S&T to form inside this gap, take it down age low, have all these extra confluences that'll give us more confidence heading into, you know, heading into the session. Right, so if we just go to the 14th here, and you'll see all my lipstick. Okay, if we just take out this. Okay, so again, key level. What's our key level? Key level. And I can't stress this enough. Asia low and 4-hour FAG. So this is where we expect a reaction. Yes, we've reached it before our time. And that's generally pretty good, because then we can look for sequential S&T to form. Okay, and what's formed here? We've got a hidden daily cycle sequential S&T. Okay, hidden daily cycle sequential S&T between Q1 and Q2, Asia and London, and then we end up getting a 2-stage cracking correlation. Okay, so we've got our key level, right? Now we're looking for another stage in cracking correlation, or something to happen within our 238 to 323 time frame. Right, so if we go on our 1-minute chart, okay, you'll see that this occurs. Oop. Apologies. Okay, so what are we looking for here? Right, we're looking for a 2-stage cracking correlation. What happens between the 215 and 238? Between 238 to 323. Okay, so our cracking correlation, our 2-stage cracking correlation, doesn't happen until the 238 sign. That's when you can know to engage in price before 3 o'clock. Okay, especially in gold. Now, if we play that through, okay, what have we got? Well, we're way below the true London Open, the true day open, and we're just creeping below the true week open. And now we're looking for our 2-stage cracking correlation to form. Right, and here we go. It happens. Okay, now we wait for a closure above this gap, or if you'd like to be a bit more risky, or less risky, I could say, I don't like 1-minute change in state deliveries as much, but they do work quite well. I prefer us just to inverse this gap here. Okay, And what time does this occur? This occurs at 2:38 to 3:23. And if you don't get your entry within this time, just pack it up, come back tomorrow. All right, so, and we just target equal highs or 3R or whatever. For this example, I'm just gonna target equal highs, okay? So if you can see, you just got to let the trade breathe, let it do its work. If you get a bit too anxious about watching your trades, best just to enter your trade, set your stop loss, and walk away. Okay, so I believe we do come back down here. I was in this trade. There we go. All right, so that's 238 to 323 again. Happened on gold. We've got our two-stage cracking correlation. We've hit a 1 hour fair value gap or a 4 hour. We've got our sequential SMT and our hidden sequential SMT. All right, so, and that's a really nice trade. This is a good 3R. I'm pretty sure you get to whatever your taste is like. It's completely up to you. So let's go through another example. Okay, we'll go to the 9th. And these aren't cherry picked. These are trades that I took myself. If you want to check it out on Telegram, you can. So if we just refresh here, my internet has been terribly bad today. Aussie internet. My apologies. Okay, so this is also a really nice trade. This key level here is a 1 hour fair value gap. It's a 1 hour fair value gap. Okay, and we actually have a monthly cycle already in action here. This large time frame. This ends up just being a big retracement because there's nothing sequential up here. Okay, which would indicate to me personally that we would return higher at least until we get another cracking correlation. All right, so this is our 1 hour fair value gap, and this is our first initial sort of London low. You can see here Asia is to the left. If you get this cracking correlation that happens below true opens, there's no chance you're even going to get to Asia. All right, so what do our key levels? What do they tell us? Okay, they tell us we want a cracking correlation to happen inside this gap and to take out this low here, which is the Q1, which is the opening price of midnight, which is the Q1's low. Okay, you can see here we have this 90-minute sequential SMT inside what? Inside this 1 hour gap, and you can see we've got this SMT fill. Okay, so we've got this SMT fill, where we fill in this fair value gap on Euro and GC, but we fail on the British pound. Okay. For those wanting to know, you need to use the forex.com ones. G&T trades like this because they are the same times as the COMEX contract. So this is our key level here. All right, we're below the true day open here, below the true London open up here, I believe. Okay, and this is where we can start to look for our trade setup. Okay, because we've reached these key levels. So this is where we can expect a reversal at this time. All right, so let's go to that time in particular. All right, so let's replay here. All right, so we're waiting. We've outlined our key levels because we're not going to engage with price until that happens, and then all the other things come into play. Okay, so do not engage with price unless we've taken out a key level. Okay, so we're waiting. Okay, so we're nearly there. Alright, so this is where we can expect our reversal to form, right? Okay, so beautiful. If we can close above this gap, so what do we got? We've got our 90-minute sequential SMT. Okay, there is no two-stage sequential SMT, but we do not necessarily need that because we've got this SMT fill. Okay, we've got this 1 hour gap supporting us with this 90-minute sequential S&T, and we're coming to the end of the quarter. So it's more likely that we just retrace back into this hourly sort of candle, which is the 2 AM candle. Okay, so that's your buy there. My apologies. So this is your buy signal here. It would usually be up here. Put your stop loss at the low, where the sequential S&T formed, and aim for 3R or equal highs. It's a big trade. And you get about 3R here, okay, and it's really nice trade. Yeah, I'll just click it there. Yeah, so that's basically the model. That is the London45 model. It works most of the time. It's very low risk in my opinion, and I think it can be very useful for London traders. So you know, I can't I can't stress these rules enough. Without a key level, do not engage with price. So without this, London45 doesn't work. Okay, if you have not taken out a key level, you're just pattern trading. Alright, that is the most important thing. You're just pattern trading if you have not taken out a key level. Okay, this does not happen at random. These key levels are taken out at these specific times, and it's super important that you do not engage unless you've taken out those key levels. If it happens after, then so be it. You look for a model during London, later on in London or New York or whatever. Okay, so that is the basis of London45. You can join my Telegram group, which I'll post in the chat, to engage with me if you like. Yeah, so thank you so much for your time. That's the end of this video, and I'll see you for another one soon.